Percentage rent is a concept where some portion of your rent is based on your sales. Some deals may have percentage rent only or instead of a fixed base rent. This structure has been popular during COVID when sales have been unpredictable, or for pop-up deals. Often, deals will have percentage rent in addition to base rent, which would take effect only if a tenant performs really, really well. Let's break down the differences between the two kinds of percentage rent. So let's start with percentage rent only or in lieu of base rent. In a deal that's percentage rent only, rather than negotiating the dollar amount per square foot in base rent, instead you'd be negotiating the percentage of your sales you'd be willing to pay as rent. This number should be no higher than the occupancy cost in your business plan budget. Percentage rent may have a floor or a minimum dollar amount or a ceiling, a maximum dollar amount that would be negotiated. Some landlords may still expect triple nets in a percentage rent only deal. Make sure you understand their expectations. Obviously, if you're expecting to pay 8% of your sales and the landlord is expecting 8% of total sales plus an additional $15 per square foot, that's not exactly the same thing. Okay, so that one's pretty simple. Let's talk about percentage rent on top of or in addition to base rent. This is a pretty common concept. What you'll see most often is 6% of sales above a natural breakpoint. So let's break down what that means. Percentage rent is due only after sales exceed a breakpoint or threshold. Most often it'll be a natural breakpoint, but there are also unnatural breakpoints. Let's start with the natural breakpoint. A natural breakpoint is the amount of sales needed to achieve a certain predetermined occupancy cost. When your sales exceed the breakpoint, you pay the amount of additional rent that keeps your occupancy cost fixed at that predetermined percent. Without percentage rent, your occupancy cost will continue to get lower and lower and lower as your sales increase, but percentage rent stops it at a certain level. The theory is that since the amount of rent you can afford is based on your sales, if your sales are so high that the rent you're paying is only a tiny proportion of those sales, the landlord deserves to share in some of that upside. In theory, your excellent location in their real estate or project is at least partially responsible for your success. This is thought of as a happy check because if you're hitting your natural breakpoint, your sales are really, really high. Most tenants that agree to a natural breakpoint don't ever hit that breakpoint or have to pay any percentage rent. Because of this, most landlords don't care that much about getting tenants to agree to percentage rent. Because this income is uncertain, they aren't able to count projected percentage rent towards the value of the asset, unless they have a long history of percentage rent from a tenant. Often, this becomes a bargaining chip that either party will concede in favor of something else. I'm gonna put up a sample calculation and I can talk you through it. Okay, so you are looking at a natural breakpoint set at 6%. When you're negotiating breakpoints, you'll negotiate that percentage. So if your target occupancy cost is 8%, 6% would be a reasonable breakpoint because it's lower than your target occupancy cost. In other words, your sales are significantly higher than they need to be to achieve your target profitability in that location. Almost always, the natural breakpoint will be set between 4 and 6%. So on the first 3 rows, the rent is $40 a square foot, 2,000 square feet, or $80,000 a year. The breakpoint is set off the rent. So at 6%, our breakpoint is $1.33 million. $80,000 is 6% of $1.33 million. On the first row, our sales are $1 million. Since that's less than the natural breakpoint, we don't owe any percentage rent. Our occupancy cost at $1 million of sales is 8%. $80,000 is 8% of $1 million. If we do $1.4 million in sales, we've exceeded the natural breakpoint. So we owe 6% of the difference between 1.4 million and the breakpoint, or 1.33 million. The difference is $70,000. 6% of $70,000 is $4,200. So the total rent was that original $80,000 plus $4,200, $84,200. And your occupancy cost is fixed at 6%. In the last example, where you're doing $1.8 million in sales, with your occupancy cost still fixed at 6%, your total rent would be $108,200, or 6% of that $1.8 million. Below that, I have a calculation for a lower rent, $30 a square foot or $60,000 annually. In this example, the breakpoint is $1 million. If you look at the right column, you can see the occupancy cost decreases as sales increase up to that breakpoint where it sticks at 6%. Let's turn to unnatural breakpoints. An unnatural breakpoint is a fixed dollar amount of sales above which you owe additional percentage rent. So remember, with the natural breakpoint, the breakpoint isn't a fixed number that's negotiated, it's based off the rent. As rent increases annually, with a natural breakpoint, it'll increase along with the rent. With an unnatural breakpoint, the parties pick the breakpoint and it increases. So when negotiating an unnatural breakpoint, we negotiate two numbers: the dollar amount that's the breakpoint and the percentage of sales over that breakpoint we will pay as rent. An unnatural breakpoint set higher than the natural breakpoint favors the tenant. This means the sales threshold is even higher than it would be automatically. You have to generate even more sales to start to owe percentage rent. An unnatural breakpoint set lower than the natural breakpoint favors the landlord. This scenario is more common. Landlords will do this often in combination with a low base rent. So let's say, for example, you're in an emerging neighborhood without a strong sales history from other tenants. You're taking a bit of risk on the neighborhood, and you're not comfortable projecting sales that would support the rent the landlord wants. So the landlord may say, hey, I'm so confident in the sales potential of this neighborhood that I will agree to a base rent that's lower than what I want, but when you achieve the sales I believe you can, I'll need to get percentage rent to make up the difference. Okay, so in this example, we've agreed to 6% above an unnatural breakpoint, and I've got calculations with two different breakpoints, $1.7 million and 1.2. You may remember from the last table that with 6% above a natural breakpoint at a rent of $80,000 a year, the natural breakpoint is $1.33 million. The $1.2 million breakpoint is artificially low. You start paying rent at a lower sales volume than the natural breakpoint. The $1.7 million breakpoint is artificially high. You have to do even higher sales to start to owe percentage rent. So again, in this example, you're not paying any percentage rent until you hit that breakpoint. In the first example, the only scenario where you owe percentage rent is the one where you're doing the $1.8 million in sales. You owe 6% of the difference between $1.8 million and the breakpoint of $1.7 million. 6% of $100,000 is $6,000, $86,000 total in rent. In the second scenario, where the breakpoint is $1.2 million, you're paying percentage rent in both the example where you're doing $1.4 million and $1.8 million. But you can see that unlike with the natural breakpoint, your occupancy cost isn't fixed. So those are the basics of percentage rent. Also note, landlords sometimes will ask for percentage rent to convert to fixed rent over a certain amount of time. The theory is the tenant has demonstrated over a period of time the level of sales it can achieve and the level of rent it can tolerate. Landlords want to see that percentage rent convert to fixed rent because they're removing the uncertainty from whether they'll receive that full rent payment, and they can count all of the rental income from their tenant towards the valuation of their asset when they go to sell it.